Bitcoin has so far enjoyed a good amount of success these past years, and so it is not surprising that investors want to continue to believe that the digital asset will continue its growth spurt. But what could very well be faith in the market might also be a denial of the obvious, which is that Bitcoin has finally entered a bear market. For about 2 months since Bitcoin hits its $64,000 all-time high, the pioneer digital asset has suffered losses and corrections that have seen the price dip even further down than anticipated. About a month after setting a new price record, the digital asset saw several dips that led to the loss of over 50% of its all-time high value. Welcome to Savvy Finance, the channel dedicated to keeping you informed with the crypto and financial markets. Big thanks to all our valued viewers. We appreciate you more than words can tell. Massive sell-offs have seen the price plummet, and with institutions showing more interest in the digital asset, the price has responded negatively. There has not been any remarkable recovery since the asset had fallen below the $30,000 price point last month. And thus, with the current market trends, it is not a far stretch to say that Bitcoin might have finally succumbed to the bear. A major factor contributing to the recent price crashes has been the crackdown by China on mining. The country had banned mining, leading to an exodus of Bitcoin miners out of the mining capital out of the world. Before the crackdown, it was estimated that approximately 70% of all crypto mining was carried out in China. This reduced the Bitcoin hash rate to dangerously low levels and thus affecting the price and increasing panic in the market. With miners still looking for where to set up their operations, the market was very uncertain as to the future of the digital asset. And as such, investors had started getting out of the market. Panic selling has also contributed largely to the price dip. Coin holders who did not want to be caught with their pants down had started offloading their coins in case the price did not recover. Whales had also taken advantage of Bitcoin's high price to offload their coins in order to buy back in when the coin dipped. Of note is Jim Cramer saying that he had sold almost all of his Bitcoins and had planned to get back in when the price of the digital asset had dipped below $30,000. So, what happens from here? Right now, Bitcoin sits at a very critical point. The next couple of weeks will most likely decide where the price of the digital asset will end up facing. Market factors right now are looking incredibly bullish as more and more fear, uncertainty and doubts floods the market. Several countries have begun crackdowns on top crypto exchange Binance, saying that the crypto exchange does not have jurisdiction or permission to operate in their countries. Sadly, this has led to doubts in investors' minds. China, along with the mining crackdown, had ordered all financial institutions in the country to stop allowing crypto purchase and trading, shutting off one of the biggest crypto markets from the wider crypto space. Following the massive FUDs coming out of the market, the fear and greed index remains firmly in the extreme fear quadrant. Old and new investors alike are very wary when it comes to putting money into the market for fear of a downturn. Most people in the industry understand that Bitcoin prices have seen better days, and many spectators are wondering when the crypto asset will rebound. The fact of the matter is, we really don't know, but people do leverage previous chart patterns from prior bull markets and have measured a number of time spans. In recent times, Bitcoin.com News has published at least 2 market reports that show speculators believe this bull run resembles the action that took place in 2013. According to the analytics provider Econometrics, the current downturn is the second longest drop since 2013, and there's still a lot more time left on the clock. On July 17, 2021, Econometrics tweeted, 431 days after the third halving, and Bitcoin at $31,678. One more week stuck in this drawdown, 95 days since the last all-time high, bottom minus 55% below the all-time high, and volatility continues to decline, the analyst added. Econometrics further stressed, this is one of the longest drawdowns Bitcoin has had to deal with during a post-halving bull market. But 95 days is still only half the duration of the big drawdown of 2013. In terms of price trajectory, this correction also looks very similar to 2013. If we continue like that, Bitcoin will remain stuck around $30,000 for a while. The analyst also added that Bitcoin's 1-month volatility was also down, but historically speaking, it isn't particularly low. So from that perspective, it is possible for the trading range to stay pretty tight for longer, Econometrics concluded. In Bitcoin, volatility is your friend. Analyst and economist Julio Moreno agreed with Econometrics' volatility assessment and shared a recent blog post he wrote about Bitcoin volatility. Moreno's report explains how people try to discredit Bitcoin over price volatility, and his study asks whether or not volatility is a bad thing. The analyst notes in his report that he doesn't believe volatility is necessarily a bad thing. I would say it is not, as it increases within each cycle along with price gains. When is Bitcoin's price more volatile? mostly at market tops. After significant price appreciation, Moreno's report emphasized. His Bitcoin volatility report concludes, what does changes in Bitcoin's price volatility imply about its future trend? Accumulation has been better at low levels of volatility, and this is typically reached before a big price movement. Meanwhile, Bitcoin whales, defined as addresses that hold between 1,000 to 10,000 Bitcoin, $31 million to $310 million, are now increasing their holdings according to blockchain analytics. While Bitcoin's price was rising to $30,000, Bitcoin whales were holding or accumulating, says an analysis by Econometrics. After $30,000, however, they began selling all the way to $64,000 as shown above and kept selling down to $30,000 again. But now they've stopped selling and have begun increasing their holdings for the first time in 5 months. Those holding 10 to 100 Bitcoin have also stabilized and have slightly increased their holdings after they began selling from the mid-$20,000s onwards. Those holding 100 to 1,000 Bitcoin were accumulating all the way from $30,000 to $60,000, buying the whale coins and that of sharks. They then held steady and even slightly increased their holdings during the drop, with small fish, those that have less than 1 Bitcoin, also buying all the way to the top. Whales have the most in Bitcoin, valued at $165 billion, followed by 10 to 100 Bitcoin holders with $135 billion. In combination, they hold about half of Bitcoin's market cap. Their turn towards selling, therefore, after $25,000 and $30,000 would have had an effect on Bitcoin's price due to increased market supply. That was bought up by the third biggest category, 100 to 1,000 addresses, which kept buying beyond $30,000 all the way until the correction. Now all three categories are either holding or accumulating, with Bitcoin's price reaching some stability just above the previous 2017 all-time high when accounting for inflation. If you are a Bitcoin holders like us at Savvy Finance, we urge you to keep hodling, as better days are coming soon. Till our next video, please stay savvy.